Greetings, everybody. Welcome back to another episode of the Wealth Advisory's Top 10. We are doing the top 10 for February 2022 today. It's crazy that it's 2022. Say that every month. Like, I can't believe that another month has passed, but another month has passed. It's interesting. I was talking with some people, and actually today, about exactly 1 year ago today, was when all of that GameStop madness started happening. Like GameStop and AMC and all those meme stocks started going through the roof. And here we are exactly a year later, and everything's going through the floor. It was a real bloodbath in the markets last month. Even before anybody really noticed, the indices were already dropping. So honestly, I'm not even going to do a recap of our stocks this month. Everything just performed so poorly. But I will say that even with all those negatives, we still performed about in line with the market, because the S&P was down 10%, the NASDAQ down 15.5%, the Dow Jones down 7%. So when your best performer's down 7%, that's a rough month. So anyway, it wasn't just the top 10 picks that got slammed this past month. It was everything, the whole market. All of our screens were just red. That's unfortunate, but we're undeterred. I'm undeterred, and I'm pretty positive I can beat last month's performance with this month's picks after how poorly last month's picks performed. So let's go ahead and get into it. In a market where not going down is basically the new going up, I'm going to look for companies that maintained relative strength last month. That means that they weren't dropping like flies while the rest of the market sold off. And some of them even eked out a little gain. So we're going to try and make that trend our friend, and we're going to get defensive for February. And we're going to put some of these stocks with relative strength in for this month. I'm really not keeping many from last month, so I'm just going to go ahead through and give you the stocks. Pretty much everything is coming out except one. I'm going to have one keeper, and you'll know what that is when I get to it. So let's go ahead and get started. First off, I've got Bank of America. Now, Bank of America managed to hold on to a little gain in January while the market sold off. It was about 1 or 2%, I think. And it's got a great balance sheet. It's stepped up its buybacks recently. And rising interest rates, while they hurt growth stocks, actually help banks make more money off the spread between the interest rate that they pay and the interest rate that they charge. So I think Bank of America is going to maintain some relative strength. I think it can hold out. If it doesn't give us another gain, it at least won't drop as much as everything else. So next up, we've got Bunge, which I like to call Bung. And I'm pretty sure I'm pronouncing that wrong, and it actually is Bunge, but Bung's funnier, so Bung it is. And Bung also gave us a gain in January, at a 6% gain at that, which is pretty huge considering the Dow was down 7%. It's like the opposite. So this is the kind of stock that really does well when people are scared, because it owns things and it makes stuff. It doesn't own intellectual property. It doesn't own ideas. I mean, yes, it does own some of those, but what it really owns are things that you can touch, that you can sell, that you can still make money off of. And it makes stuff, and, stuff that people want to buy, stuff that people need to buy, foodstuffs. So that's something that people aren't going to stop buying. And so Bunge can raise its prices to combat inflation, and people are still going to want to buy its stuff. Plus, it pays a dividend, and any extra income in a market like this is good. So those are our first two, Bank of America and Bung or Bunge. Next up at number 3, we're going with Dick's Sporting Goods, because it gave us a 4% gain last month, which is amazing, and even got some growth over the past week while markets were searching for direction. So that's real strength, since most of its peers were selling off. And I'm going to bank on Dick's giving us another little gain as the markets continue to seek direction in February. So that brings me to my 4th pick. And I'm getting back into the old tradition of picking our newest investment and putting it in the top 10. And that means this month, I write a monthly investment newsletter called The Wealth Advisory. Don't worry, this isn't an ad. It's to explain why you're not hearing me speak right now. It's because over 25,000 members pay the very reasonable annual subscription fee for the Wealth Advisory, so they can get my latest insights and advice hot off the digital press. I believe I have an obligation to my loyal readers, so there will be a quiet period during which the latest investment recommendation will not be made public. Should you decide you want to join the Wealth Advisory ranks and get immediate access to these picks, You'll find a link in the video description to a secure order page where you can sign up to become a member. Of course, I invite you to tune into the Wealth Advisory Top 10 videos for as long as you like with no obligation whatsoever, except maybe to hit the like button once in a while. To get some stability like that in the top 10 this month. So that's our first 5. Now we're getting to my one keeper this month, and it might seem kind of odd because this one had a really rough month, but it seems to have found a bottom and found a lot of love from analysts. I'm talking about Chewy. You guys know I love Chewy. You know that I love it as a long-term play. I think that it's going to be a very, very big company in the future. I think it's going to do really, really well for us, but it's down 30% since last month. And it's come back 12% since last week. So it's got a lot of value, it's gonna keep growing, and prices really got ahead of themselves, but they're back to a much more reasonable valuation, and investors are buying. So I wanna get that in our top 10 as number 6 this month. And continuing on for my 7th pick, I'm going with a defense contractor since we're being defensive this month. These guys have been getting tons of new massive contracts from the government, and obviously I'm talking about Leidos. It's been selling off over the past week, but it's got value and profitability, and those are 2 things investors really want right now. So if it doesn't turn around this month, at least it won't fall as fast as the rest of the market. You can see that I'm sort of, a lot of these picks here are, we're not expecting them really to get a really aggressive rally going, but they're more defensive. They're going to fall less than the market if the market continues to fall, and they'll probably go up a little bit faster if the market turns around. So now that we've got our first 7 out of the way, for the last 3, I am going to get a little bit more aggressive because these stocks have sold off so much that I'm just adamant we all need to be buying them at these prices. So even if they don't do well this month, that's okay. I'm willing to make that sacrifice in the top 10 because these are great stocks at rock bottom prices, and in the long term, I think we're going to be really happy for picking them up around here. So to start the last 3, my more aggressive picks, first up we've got QuantumScape. Now the company sold off by more than 40% in January. That's a big hit. But it also released data that shows it's achieved an industry first charge time of 15 minutes for over 400 cycles. And now that's data that's been verified by a third party. So that means that it's true. That was one of the questions people were asking about QuantumScape because they were keeping everything real tight to the chest and not really sharing their data because, well, they don't want people copying their stuff. But they started bringing in third parties to do the tests, and the third parties have basically verified all of QuantumScape's results. They are moving forward, they're making big progress, and they've got us one step closer to meaningful revenues. So I want to get them in the top 10 this month, and I just really think that people should be buying at this level. It's too cheap. So next up, I've got Twilio, another aggressive pick because it got smacked in January and lost over 30% of its value. But its services are still in really high demand. As companies focus more and more on customer engagement and customer experience, that's only going to become more true. Twilio allows you to really reach out and touch someone. They're like the old AT&T slogan. They allow you to really get that personal interaction with your customers. And companies like Morgan Stanley, companies like Uber, companies like Amazon, all of these different companies, you want to talk to their customers, and they're using Twilio software for it. I see a lot of growth coming, and the stock's super attractive at these levels. So while it might not rally this month, we should still all be adding shares for the long term here. And so that brings me to my final pick. And it's another relatively new one, but we've had it for a couple of months. It also sold off more than 30% last month, and now it's sitting well under $100 a share and looking super appetizing. I'm talking about Unity Software. It's making big moves. It's acquiring companies that are going to help it dominate the metaverse. Again, while it might not rally this month, I think everyone should be adding shares for the long term at prices like this. Under $100, Unity is just too cheap. It's got too much future potential. We should all be adding to our positions here. So that's why it's making it in as number 10 in this month's top 10 picks. So let me go back and just recap for you. I'm going to give you the first 7. They were a little bit more defensive, and then our last 3 are a little bit more aggressive. Coming in at number 1, we've got Bank of America. Number 2, Bunge. Number 3, Dick's Sporting Goods. Number 4... 6, Chewy, and number 7, Leidos. And then getting into our more aggressive picks, we've got QuantumScape at number 8, Twilio at number 9, and Unity Software at number 10, rounding out the top 10 for the month. So hopefully we can perform a lot better than last month. Hopefully my aggressive picks get an aggressive rally, and if not, then hopefully those defensive picks help you preserve some capital and make a little bit of loot during a tough market. Anyway, thanks for tuning in. As always, thanks for watching. If you're watching on YouTube, please don't forget to subscribe to the channel, click that like button, and smash the bell to make sure that you get notified when I post more stuff. Take care. Have a great month.